All right, one of our top stories today, Portugal. The country may need a financial lifeline of as much as $99 billion. Now, the country moved closer to needing a bailout when Prime Minister Socrates offered to resign last night. Well, Baha is a portfolio manager and head of global developed credit at DoubleLine Capital, which has $9 billion in assets under management. She says Portugal has basically reached the end of the road. And Bonnie joins us now from our Los Angeles newsroom. Bonnie, thanks so much for joining us today.
It's a pleasure, Lisa.
So you're not the first to say this is the end of the road for Portugal, but let's talk a little bit about the Prime Minister tendering his resignation last night. What has that set in motion? He's still the Prime Minister at the moment, as far as we know.
Yes, indeed he is, but he will certainly be a lame duck prime minister. Look, this really could not come at a worse time for Portugal and for Jose Socrates. On the eve of a big EU meeting to address, among other things, the European debt crisis, as well as the fact that Portugal has, by most estimates, about 9 billion in euro-denominated debt that needs to be rolled over in April and June of this year. Refinancing that in the public markets is going to be very difficult.
Bonnie, let's talk a little bit about that. There was a guest on Tom Keene's show earlier today saying that an EU bailout would really be a bailout for the bondholders. But, you know, that said, it probably still has to be done. What do you think?
Well, a bailout, so far the bailouts that the EU have offered have followed a pattern of austerity followed by more loans. I can only imagine that's going to be the same pattern that we see here. Again, at this point, I find it hard to believe that Portugal will be able to access the public bond markets. Now, Spain has successfully accessed the markets several times this year. However, we're talking about $1 trillion economy with Spain versus about $250 billion for Portugal. So it's really apples and oranges.
So you think that there will be another bailout at this point? So far, Portugal has not officially asked or formally asked for a bailout, but sounds like you think it's inevitable. Will they still have to put an austerity package in place?
Yes, first of all, I do think it's inevitable. I think, you know, let's be realistic. For every asset out there at the right price, there's a buyer. But the interest rates that Portugal would have to pay investors in the market to issue public debt would be absolutely prohibitive. Let's also keep in mind that in the case of both Ireland and Greece, their governments came to the public markets and said there was no way they would be seeking any sort of bailout money when, in fact, a month after making those statements, they recanted. I think the same situation is going to happen here.
Let me ask you this. At what point do you think for an investor is it safe to get into Portuguese debt?
Oh, that's a very good question, Lisa. It's going to take a while. Look, we're looking at an economy that is a high-cost producer in many cases, especially with regard to other European and Asian manufacturers. There is a reliance on tourism there, not as high as it is in Greece, but certainly if we see the type of civil unrest in Portugal that we have seen previously in Greece, that's going to be a negative impact. They're in a situation where they really have to remake their economy. The labor market there is very entrenched. They have, in fact, put in some austerity measures earlier in the year to include a 2% value-added tax increase. There's got to be more. And, you know, let's face it, no politician wants to be the one up there in front of his people saying, here's the good news, I'm going to raise your taxes and lower your compensation. And that, in effect, has to happen, and the economy has to find its footing, and that's going to take, in my opinion, quite a while.
Well, U.S. investors may be not reacting strongly to what's happening in Portugal, but there's certainly some surrounding countries that are affected. A lot of people talking about Spain today. We did see a downgrade. What do you think of the banks today by Moody's? What do you think is going to happen with that country, and are they putting pressure on Portugal to put another austerity package into place?
With regard to Spain, first of all, it's Portugal's largest trading partner at about 26%. That's meaningful. Spain, again, is 5 times the size of Portugal. The problems Spain has suffered have been somewhat different. Portugal has borrowed too much and lived beyond its means. Spain is guilty of that to some degree, but to a greater degree, the Spanish story, and especially with regard to the banks, is one of a property bubble bursting. They have fairly high unemployment in Spain, something like 20%, especially among younger people. However, their government has shown, I believe, more of a wherewithal to deal with the problem and not let it escalate. And I think that's the reason the markets have given them their vote of confidence and allowed them to do some debt financing this year successfully.
Bonnie, would you be a buyer at this point of Spain? Earlier today, there was an interesting article quoting a fund manager saying that he would actually be a buyer of Portugal over Spain.
I would not. I would take the opposite tack there. I think I would be a buyer of Spain ahead of Portugal. Right now, I'm not sure either of them would be screaming deals, so I'm not sure I would look at it as an either or. But certainly, in terms of remaking its economy, Portugal has a lot farther to go than Spain does, even with respect to the big Spanish banks, which again were downgraded 2 notches this morning. I think still the banking system there is fairly well run. Again, it is a liquidity issue more than a solvency issue at this point for Portugal, certainly, and the banks are finding their way out of it, similar to the way the U.S. banks found their way out of the crisis after 2008.
All right, Bonnie, thanks so much. Appreciate your insight today. That was Bonnie Baha of DoubleLine Capital.